Hello, and welcome to the 8th episode of the Markets at a Glance series. My name is Rufas Kamau, and I'm going to be taking you through today's session. So remember, the session is with FX Pesa. That's the Kenya stockbroker. So today we'll be focusing on what's happening in the financial markets today. That is events that are currently influencing the performance of Forex, as well as commodities and equities in the market today. So before I make any progress, I would like to start with a mic test. So if you can hear me clearly, kindly type hi on the comment section, and these will confirm that everything is working just fine. And hello, Sami, welcome to the session. Hello, Nixon, welcome to the session. I'm already getting some good questions here. Hello, when was FX Pesa started? This was 5 years ago. How is it in terms of spreads? Spreads are very friendly. So this is the right place to be. Hello, Kerry. Thank you for the response. I think now we can start right away. So focusing on the markets, there's quite a number of things that you're expecting this week. So I'll start majorly by focusing on the economic calendar. So from the economic calendar, you can see that this week is largely silent. There's nothing much happening for the first days of the week. So we saw the retail sales in Australia coming up less than expected at negative 0.2%. Canadian current account getting worse at negative 11.1B. This is the difference between exports and imports. Markets have been largely moving sideways. Unemployment in Japan came worse than expected at 2.6% early in the morning. German preliminary CPI, this one was a little bit of an improvement compared to the previous month. So we haven't had any surprises in the market, and generally the prices have been moving sideways. So if you look at the Spanish flash CPI, or indication of the inflation rate in Spain, it was 6.8% from 7.3% the previous month, indicating that inflation is now moving in the right direction, slowing down towards the 2% target range. So as for today, the most important news that we're expecting for the day is the GDP month over month later in the day. At the same time, housing price index in the US, this will be at 5 p.m. So we expect some further drop in housing prices in the US as the real estate market keeps on cooling down. Then later on, we'll be having a sequence of two speeches, one from Bank of Switzerland governor. This is Schlegel at 6 p.m. Then also Bank of England Governor Bailey will be issuing a speech at 6 p.m. So nothing much that we're expecting today. So as we head into tomorrow, that is Wednesday, this is when we expect stuff to start heating up this week. One will be looking at Chinese manufacturing PMI, or the Purchasing Managers Index, or basically the efficient index, basically tracking the conditions in the manufacturing sector in China. So this will be a key indication of how the Chinese economy is performing. And also it might have some influence on the performance of equities, especially European equities, as well as the price of oil. So if China is really doing well, then being the biggest importer of oil, it basically creates demand and higher prices. If it's slowing down, then it also slows down the price of oil. So besides this, we'll be looking at European CPI, or European inflation data. These will be expected much later at 1 p.m. So this is an estimate of the inflation environment in the Eurozone. So if it's getting higher than the previous reading of 10.6%, then this may push the ECB to basically do a stronger hike in order to control the inflation that is running higher and higher. So this will be a key data point for the ECB when it's making its next decision. So investors will be following these in order to adjust their positions accordingly. So besides this, there will be ADP non-farm employment change, which is often a leading indicator of the direction of the NFP. So remember, every first Friday of the month, this is when we look at the US jobs data. So the very first Friday of December is this week. So on Friday, we'll be looking at the non-farm payrolls in the US. So besides this, there's more information. One, the Federal Reserve Chair, Jerome Powell, is set to give a speech on Wednesday at 9:30 p.m. at the Brookings Institute titled Economic Outlook, Inflation and the Labor Market. So the speech to the non-profit think tank comes just before the release of the latest US inflation and jobs data. That will go a long way to decide the outcome of the mid-December FOMC policy decision. So a lot of investors will be following up on the speech by Jerome Powell tomorrow to see if there's any hints regarding the speed at which the Federal Reserve is looking to implement further rate hikes. And at the same time, looking at a potential peak rate and also maybe an outcome of where they plan to stop cutting rates. So currently, what we have been experiencing with the strong dollar throughout the year is that the Fed started hiking interest rates in March and have been doing so consistently, moving the rates from 0.25% to the current level of 4%. So if these rate hikes keeps on going up, then we will be seeing a peak rate of about 5%. And this is bound to continue strengthening the dollar. So as the dollar strengthens at some point, we will be seeing other currencies weakening against the dollar. And once we get to the peak rate, then we might start looking at the reversal, where now the Federal Reserve Bank of the US will be looking to cut interest rates, whereas other central banks will be lagging behind. So they will be still in a phase where they are raising interest rates, while the US is cutting interest rates, and that divergence could create a very strong reversal in currencies. So going back to the charts, I'll try and share my screen here. The very first chart that you see here is US oil, or WTI. Sometimes we call it the West Texas Intermediate. Clearly, this one has been going up for the better part of the year. So since the beginning of the year here, the price of oil was trading at around $73.6 per barrel. So it went up for 2.5 months, all the way up to around $126 per barrel. So this was a big shift. So we can all see this movement here. So after getting 68 to 70% gain, the price started going back down, and the better part of the year, price has been moving back downwards. So remember, for the US, the President Biden has been drawing more oil from the strategic oil reserve, and this has been pushing prices back down. So this has erased all the gains that we experienced throughout the year. So if you look at the price at the beginning of the year, this was right here. I just want to get the right point here. So this was the price at the beginning of the year. So already the market erased all those gains, bounced strongly 2 months ago, went back down and then up and then down. And now you can see it's testing this area here. So if price crosses the $75 level, it will be trading below the yearly open. If it trades higher, then it will be above the open. So when you focus on the factors influencing the oil prices, we know there is quite a number. So one is the biggest importer of oil in the world. This is China. So currently, China is being faced with a rise in number of COVID-19 infections, and this is quite worrying, especially that we are 3 years into the pandemic. So with these cases rising, the Chinese government has been practicing a policy called the zero COVID policy, where every time there is infections, they lock the entire area down, implement their measures until the last person is free from COVID. So once they're done with that, the area is reopened, and then they lock down another area that has COVID and so on. So the strategy is proving hard to implement. It's proving to be tough, to be realistic. So at some point, we'll be expecting the Chinese government to reconsider and look at alternative ways of treating COVID-19 infections. So as per now, we were having demonstrations happening in China over the weekend and yesterday, and this led to a speech that was presented by the state earlier in the day. And in the speech, they did not address the potential for removing the zero COVID policy. So in this case, China continues being ravaged by the rising COVID-19 cases. So with this in mind, it basically means that we expect oil prices to continue going down. So the downwards pressure on oil prices remains. And considering that yesterday we had such a very nice bull run, there's that potential that the prices could keep going down. So from what I have here, it's a nice trend line indicating the resistance that the market has been facing since around 10th of November. So look at the number of times that the price has been testing this trend line, attempting to break and every time failing to break. So it managed to break this area earlier in the day. First, there was a very strong pin bar here. You can already see these indicating rejection of higher prices. So potentially we could see the prices start to move back downwards. So remember, as we proceed with this session, this is not investment advice. It's purely educational to basically help you understand the key levels and time your market entries, understand the key information in the market that you need to look for in order to make your decisions. So that being said, you can already see that for the better part of today, the US oil has been unable to break this particular level. And it's an indication that the market is losing momentum and the bears are particularly entering around these levels. So there's a good chance that the market could eventually reverse and continue moving downwards since nothing has changed fundamentally and there's no case for a strong bull run in oil. So on one side, that is on the demand side, manufacturing is slowing down, not just in China, but also in the US and in the Eurozone. And then on the other side, for the OPEC, we're expecting that they will cut output in the next meeting in December, but at the same time, that is still far off. So as per now, all indications show that there is a good chance that US oil keeps going down. So just in case you're participating in this, a nice level to set a stop loss might be just above Friday's high. You can see Friday's high. So somewhere around $80 per barrel. And then now to the downside, there seems to be a really nice chance that the price could go back to yesterday's low. So you can already see the potential shaping up here as the market attempts to reject this particular resistance here. So as for gold, it's largely moving sideways, nothing much happening in gold. So as I mentioned, it's a very quiet week. So a majority of the information might be as a result of the speech from Jerome Powell tomorrow. And at the same time, we might be seeing something happening from the NFP on Friday. So sometimes on NFP week, the markets will be largely quiet, and then they get very volatile once the news is announced. So not much happening in gold, just some sideways momentum. So I'll be watching for some potential breakout level, especially during the announcement tomorrow. That is the speech by Jerome Powell. Once that happens, then there's a chance that the market could break and start moving in one particular direction. This could be up or down. We don't know. We just wait and see, follow the news closely and look for that particular breakout. So as for other currency pairs, if you look at Audi USD, nothing much is happening in these pairs. They all seem to be moving sideways. So you can already see these kind of consolidation patterns forming. So for this one, it's a triangle. You can see the lows and the highs here. So all you have to do is to map your areas and then look for the right entries once the market breaks these particular levels. So easy to observe, be patient, and wait for the right moment to make a market entry. So if you keep watching, similar thing happening here. This is a USD JPY currency pair. You can see the resistance levels there. You can see the support levels here, all clearly indicating some form of sideways momentum. So this is a synonymous of a quiet market that doesn't have much happening, but eventually once there's a breakout, then you start seeing stuff happening in such a market. So just to give you some perspective, you can see 2 weeks ago, this was what was happening in a USD JPY currency pair. So some sideways momentum followed by a nice break here towards the upper side. So the break did not last long, but it was quite a significant break here. So sometimes the markets will trade sideways for a while, and then once the breakout, you're able to identify a directional movement in price. So we keep on moving. Equities are basically hitting some major multi-level resistance levels. So first of all, we have the Dow Jones index here. Clearly, this was the highest price at the beginning of the year. This was the very first few days of January, on the 4th of January. Market goes back up to the same trend line. This was on 20th of April. Then the same trend line. This was recently on 15th of August. And now it has broken this particular trend line, gone up and then tested this previous high. So after testing this previous high, notice that the market is facing a very strong rejection, indicating a reversal, and the markets could be going back down. So one key thing to notice is that fundamentally nothing has changed. The US is still facing some very strong recession fears. So companies are still firing more people, others are freezing their new hiring. At the same time, when you look at the Fed policy, it's still raising interest rates, haven't hit target yet, and inflation is still high. So the last reading was 7.7%, and this could continue into the next month. So as long as the Fed keeps hiking interest rates, tightening policy, and companies are not operating at full capacity, then the bear market could continue for a while. So there's a good chance that this could be a very nice entry, targeting lower prices. In this case, having tested this resistance, indicating that the bear market is now beginning to weaken, but has not ended yet. So same case with the US Tech 100. Somehow it was unable to rally like the others. So while the others went all the way to the daily resistance, the US Tech 100 did not manage to make such a movement. So yes, there was some slight bullish momentum here, but as you can see, it was unable to rally all the way up to the upper trend line. So if I was to zoom out here, just to show you the upper trend line, so it's on the daily chart. This is the highest price at the beginning of the year. So this was the March high and then the August, September high. So in this case, the market hasn't hit the high here yet. So there's a good chance that we'll be seeing the prices reverse and start moving downwards. So if you look at the US 500, and this is the last one that I'm checking today, where is that? Okay, just a moment. Let me open the chart. So this is the S&P 500. You can see how it has been performing. So from the daily chart, you can already see that it has bounced from the upper trend line. So this is what we are basically focusing on. The high here, the high here, these are the high. So somehow unable to hit the upper trend line, but already showing signs of reversal. So the signs of reversal are from the most recent price action. So if you go to the 4-hour chart, then you can see that things are seemingly cooling off in this particular movement here. So unable to form higher highs, indicating that there is that potential for a reversal. So remember, the idea is that as long as the bear market remains, then we want to ride the market as it goes back down to the previous low. So when you focus on these, the movement higher here on Friday, then there was Monday here, and today being Tuesday and absolutely no attempt to go up, then there's still that chance that the market could drop all the way back down, especially if we see a hawkish Fed, a Fed that is strongly focusing on hiking rates higher, keeping them higher in order to make sure that the inflation is moving in the right direction. So this particular trend line on the lower side could be the determinant factor for a potential entry on the lower side. So the most promising one seems to be the Dow Jones so far. So if you're watching the Dow Jones, then this is an interesting area. Just look at the price action around this area. If it indicates a strong entry by sellers, then look for a potential opportunity towards the previous low. So these are potentially a position that you can ride for quite a period of time and get to make some good rewards as we approach the end of the year. So that's it for today. Just checking to make sure that there is nothing that I've missed. So lastly, we know that there is a current war or battle happening between the Twitter CEO, Elon Musk, and Apple CEO, Tim Cook. So it began with Tim Cook. He basically reduced the budget for advertising on Twitter, kept on reducing, and Elon Musk noticed, and somehow he couldn't get any explanation for that. So the attack began earlier in the morning when Elon Musk tweeted that Apple ecosystem is against free speech, has been censoring a lot of people and organizations, and now it's becoming a national conversation in the US. So besides that, there is also a secret tax of about 30% on each and every transaction that you make on Apple Pay. So for any company that is operating on Apple App Store, then it basically pays 30% tax to the company. So this has brought out of conversations about the company, out of bad news about the company, and it has caused some level of panic in the markets. So if you look at Apple stock and how it opened today, it was down 2.6%. And sorry, it hasn't opened yet. This is a pre-market trading. So just want to share this. So remember, the market is opening in the next 1 hour, 10 minutes. So in between, there's a pre-market trading. You can already see it was down 2.63%. at the close yesterday, and today it's up 0.26%. So a lot of investors will be focusing on this to see how the market reacts to this. So remember, on one side, it's not a win-win kind of a battle. So if Apple decides to continue with its threat of removing Twitter from its App Store, then it will be losing a lot of clients, as a lot of clients will be looking to access Twitter from different devices. So it might mean they move or switch to Android. So at the same time, Apple gets out of revenue from its marketing and advertising. So it will spend money on marketing and advertising, but as a result of that, it gets out of sales for its products. So one of the platforms it has been using to advertise itself has been Twitter. So without Twitter in the company, then the company will have a weaker operating strength. So in this case, I don't think they are going to gain anything by basically removing Twitter from their store. So in this case, at some point, I expect some level of negotiation between the two companies. And once this is achieved, then we could start seeing the two companies recover. So as for now, I think it's a panic selling mode. So we could see some further downside as we continue with today's session. So I'm still checking to see if there's any questions from you guys. Oh, awesome. Getting out of questions here. Speak on BTC and Ethereum, gold. I'll check on that. So lowest, almost close to zero spreads on all assets, regardless of it being high volatile market or not. Yes. All right. So time frame for oil on my analysis, I have already done US30 and NASDAQ, dollar index. Okay, so gold, Bitcoin, and Ethereum. So let's do this as we approach the end of the presentation today. So where is that? So gold, as we already mentioned, it's moving sideways. So that's the 4-hour chart. Even on the 1-hour chart, you can clearly visualize this. So with sideways momentum, it means that there's an expectation that we'll be seeing a breakout happening on Friday. So on Friday, there's a good chance that we'll be seeing the markets breaking out, and this could present an opportunity for us to make money on the break. So in this case, it's all a matter of monitoring the price action around these two trend lines. So if there's a break below this trend line, then it may imply we go short. And if there's a break above this trend line, then we basically go for a buy trade. So that's how we go about it. That is for gold. So besides trading gold, there's a question about Bitcoin. Bitcoin is largely moving sideways. So there's still a lot of counterparty risk resulting from the crash of FTX. So we are getting to know more details by the day. So today there's 2 more exchanges that went bankrupt or filed for bankruptcy, and I expect this particular trend to continue. So as this continues, Bitcoin will keep on dipping, and every time there's a sharp dip, then it basically creates an opportunity, especially for long-term buyers. So it's a capitulation moment where the last weak hands will be looking to exit the market, while the strong hands will be looking to enter the market. So if you're looking to buy Bitcoin, that is for long-term holding. Let's say you're looking to hold for the next 2, 4, 5, 10 years, then these prices are particularly interesting, especially considering that the hash rate is now going down, indicating that miners are basically getting kicked out of the market. So as for now, start looking for potential buying opportunities whenever there's some further dip. So on the other hand, when it comes to technical trading, as I mentioned, we're expecting a stronger dollar as a result of the rate hikes. So a stronger dollar would basically means weaker Bitcoin. So anything hitting resistance might represent a short selling opportunity. So already you can see the small sequences happening here. So candlesticks get smaller and smaller, and then a break to the lower side, smaller and smaller, a break to the upper side, smaller and smaller. So at some point we might be experiencing strong break towards the lower side. So still a sideways momentum, trading within a range, going up, down, up, down, up, down. So as for now, I would expect that the market would form another breakdown and maintain this structure until the news on Friday. So I think Ethereum is still correlated strongly to Bitcoin. So I'll be doing the same. So we open the chart for Ethereum. Sorry for that. So here's a Ethereum chart. So we are still seeing some level of sideways momentum in this. So nothing much happening at the fundamental level. So it's just market being weak and weak. And some of these exchanges that have been holding Bitcoin and Ethereum, they're just trying to sell more in order to recover more assets for their clients. So remember, it's a liquidation process. So at some point, we'll be looking at these funds held by these exchanges being liquidated or converted to a stable coin or just to simple dollars in order to repay the clients. So when this selling pressure keeps on happening in the market, then it keeps on pushing both Bitcoin and Ethereum prices lower. So if you focus on the most recent price action, looks like a rise here. Market gets to the upper trend line, starts moving sideways. So this is a resistance that we saw last week. We saw it on Monday, that is yesterday, and then today. So eventually, there's a good chance that we will be seeing the market drop further down. So on the counter, if it goes up, then we basically focus on the next high. So while this remains as a potential target, 1157, then the potential resistance is on the previous high. So the other previous high seems to be somewhere around here. So 1270 might be a nice target, especially if price breaks outside the current movement and starts moving strongly higher. So from the smaller time frame, which is the 15 minutes chart, it's already indicating very strong resistance, rejection of higher prices. So you can see this area here. So first time rejects, goes back down. Second time, this time there seems to be a lot of struggle, longer tails towards the upper side, indicating rejection. So a stronger idea that the price might be moving back downwards from this level towards the previous low, which is basically today's low and also yesterday's low. So that's it for today. Hoping I've answered your questions. I hope to see you guys on the next session.